Okay, what's going on, everybody? So this is going to be the part 2 of the actual, let me get rid of some pages up here because we got a lot of going on. This is going to be the part 2 of the actual gradebook itself. So going down into what we're actually looking for, right? So now let's start off on the weekly time frame. We always want to start off on the weekly time frames and start building our bias from there, right? So looking at the weekly time frame, we have came back to this area of previous support now turned into resistance. So let's do this. You can also add support and resistance into your gradebook, but you know, on the higher time frame. So you can have higher time frame support and resistance level, lower time frame support and resistance level on your gradebook, and then put that probably to 1 point, right? Depending on how much you value that. Right, so on the weekly time frame, clearly we have rejected this area of previous resistance and we formed this nice sell signal here, right? So now let's go to the daily time frame. So again, you know, we formed this valid double top pattern on the daily, and we did what? We broke structure, right? Very nice, clear break of structure. We closed under this level and we closed under it here as well. So now looking at the 4-hour time frame, right? I'm gonna go over an actual trade I did take. Right, so again, we're going to use our Fibonacci tool from point A to point B, right? And let me actually turn on some of my levels. I had them off for a different video, right? So now the market has pulled back to a level of major structure, right? We're going to actually highlight the whole thing, right? So background, let's actually make this a blue. Right, so now the market has pulled back to a major structure level. That's going to give us a CTS score of 1, right? Major structure level. So we're going to have 1, right? We also pulled back to a Fibonacci ratio level. Fib retracement level. There's also what? Our gradebook, Fib retracement ratio. For me, I value Fib retracement a little bit more. So that's going to give us 2. We have a higher time frame confirmation, which is going to give us 1. So we already have 4 points, right? This is a pullback, the pullback strategy, guys. Pull back to a major level of structure. We have the higher time frame confirmation here. We have the bearish engulfing candlestick, right? Right. So let's continue now. Let's actually go down to the time frame because I actually did take this trade. Right. So why did I take this trade? Well, what do we have here? Right, we have this lower low, lower high, complex pullback. Right, once the market closed above this level here, it is a complex pullback. Again, this is not a valid lower high point. Why? Because the market didn't form a low. So the market could pull back all the way up to 100% and it still be a valid downtrend structure. Right, so let's continue, guys. So what do we do in a complex pullback? We could possibly have a fib inversion set up. So we're going to go from the lowest point to about the highest point and then back to the lowest point there. And we're looking to sell at the 1618, which is at what level as well? The 3820. So again, we have more Fibonacci confluence. So then we have fib extension. Right, remember guys, what is fib extension used for? To measure to see where an extension or a higher high or a lower high or a lower low, my apologies, could end. Right, so we have the 1618 at a 3820 PRC level. Fibonacci confluence. Right, what did we have after that? A 3-bar reversal. Right, so can we enter already based off of all the information we have? Well, you know, in real time, this would be the bearish engulfing on the 4-hour time frame. So unless you took this as a complex pullback setup and entered right on a limit order here, then no. Right? I missed the complex pullback setup, but it helped with my confirmation. Right? So when the market started consolidating here, I decided to take a sell order at the breakout right here. Had a 1 sell order here, right? And then we had a what? We have support here. Let's say it's along this area. We had support there. I already had a sell order once we closed under that level of support, right? So that was my first sell order. my stop loss. I ended up putting my stop loss at about 1100 flat, just because it's that psychological number and we were above this level here, right? So that's my first order. And I wanted to take my first order out at the low here, right? So I actually ended up getting out, I believe it was at like 33 pips profit around this level here. This is when I decided to get out on my first order. So my first order, I got about a 1-to-1 risk reward ratio, right? That's fine, right? That was my first order. On my second order, right now, let's do this. What else do we have? A break of structure. So we have a lower time frame confirmation as well. We have a lower time frame BOS, right? Because we broke that level of support. What is a lower time frame BOS to us, right? So 1. Okay. Then we had a retest, another pullback to this level of resistance, and right once this candle closed, we had that nice lower low close pattern, same stop loss level, but this time, which level did I personally target? Well, this time I targeted an extension level for my second order, being the 127. So the second order was a higher lot size order, right? As you can see, right after that, the market just went straight in our direction. We hit targets. I got out this order, closed, moved my stop to break even, and got out at my TP2, my target 2, right? Oh no. So let's go back to UJ here real quick. So if we're actually, let's just pretend this is our journal. The pair we traded was USD-JPY. The time frame, or the time that we entered our first position was along this area here. So let's do, we did the 21st of March 2019 is when we entered last night. So date, I believe March is the 3rd, so 03-21-19. Time was, I believe, around, I entered along like, it was like 4 p.m. or no, it was like 6 p.m. So I'm going to go off muscle memory here, 6 p.m. Stop loss on the first order was, I believe, 30 pips or 20 pips. First order, I actually need to go back down to a 30-minute time frame. So the first order was along this break here, then 1100 flat, 25 pips stop on the first order, and on the second order I had a 25 pip stop. Then I closed at around 33 pips at this support level here, so 34 pips. In the second order, I entered was here, then this level here, then we got out at the 27 extension level flat, right? So then let's go back to here. So position 1, we caught 33 pips, right? Actually, we're gonna leave this for now, right? We made a little more than that on my first position, but that's fine. This is just for example purposes. In the second position, we made 84 pips. Again, the trade, if you guys saw the actual trade itself, I made way more than this, but that's kind of irrelevant. A lot of people ask me about the actual backtesting log. So what I normally do is I enter 2 positions at around 1.50% risk, so it averages to about 3% risk per trade, right? So then I'm gonna put the time close for this trade because that's how the overall trade ran, right? So it took, we ended up closing this morning, the 22nd, 03-22-19. Oops. And then the time close was around 10:30 the morning a.m. Okay, so then, did we follow our rules 100%? Yes. Errors made. We made no errors because we followed all of our rules. The strategy was a pullback strategy. The type of entry was in engulfing right? This was the type of entry, but normally we're going to do market execution. The gradebook. Let's go back to our gradebook. We had 3 points, 4 points, 6 points. We had 6 points for our gradebook. Time frame was based off of H4. Risk reward ratio that we were first targeting was about a 1 to 2. Right? This is normally meant for the backtesting log itself, not really for the actual trade journal, because in the backtesting log, if you have, let's say you're backtesting, right, and you're taking more losses on a 1 to 2 risk reward ratio and you're a little less profitable, so let's say you change your risk reward ratio from a 1 to 2 to maybe a 1.5, right, 1.15, right, and you start profiting more, then this is why you have it here. So instead of 1 to 2, I'm going to do 1.15, right? And then I notice I'm winning more trades and being more profitable by simply lowering the risk to reward ratio, right? So again, these are just things you need to tweak. This is mainly for the back testing though. This one's just for the actual journal itself. Why do you think it's so important? See if you followed your rules here. Again, for the max drawdown, right? If you take more trades outside of your plan, meaning you're breaking your rules, and those trades, hey, I took a loss because I broke my rules this trade. It was a bad trade. Oh, well, I probably should stop doing that, right? Because I took a loss. I took a loss that would have been unnecessary, right? It could have been a loss that could have been avoided, right? So hopefully you guys now understand the point of the gradebook here. So I'll be talking to everybody in the next training videos.